Hey guys, welcome back to the channel. So in this video, we're going to be talking about XRP. I wanted to delve a little bit deeper into um, Ripple, into the company that is behind XRP, because we need, before we make an investment, we need to make a smart, we need to make sure that we're making a good investment, not a bad one, that we will not see a return. So, Ripple is a website that, or it's a company rather, that is describing itself as the best digital asset for global payments. And it says XRP offers financial institutions the fastest, most reliable option for sourcing liquidity on demand. So this means that XRP will give financial institutions, businesses, homeowners, business owners, the fastest, most reliable option for sourcing liquidity on demand. Now, if you know what liquidity is, by definition, that just means that, dollar bills in this economy are liquidity. You can use this liquid asset to purchase and, to have transactions, is to make, make decisions, and you can buy things. That's the simple point. So right now, our $1 bill has liquidity. We can go into a store, we can go buy, whatever, our groceries, we can pay our rent, we can do all these things with our $1 bill. And because it is a liquid asset. And so the assets, if we Google assets, no, financial assets definition. So a financial asset is a what in the world? Okay. Let's just go to Wikipedia. Now, the thing that I find interesting about college is that colleges today say that Wikipedia is not a reliable source of information. They say when you need to cite your sources, you should use, books, and you should use, um, references that the institutions themselves have already verified. And there's a good reason for that. And that's because the Wikipedia is kind of a new, in the long scheme, it's a new idea. And it's good to have people educated in all these books and all these, old things, so that, moving forward, they will be aware of, how those implications, function in the real world. So Wikipedia is a free, open source of information that is cross-checked by people around the world to make sure that it's correct. So it's a world information. It's not just a book or just, a study. It's an entire world of people who are constantly editing this and adding to it and saying this isn't correct, this is correct. And by having a number of people verify and agree or disagree or have sources, it improves the quality of the text such that, by doing research and finding the sources to back this up, normal people in the American population or in the world population don't have to do it. So, anyways, a financial asset is a non physical asset whose value is derived from a contractual claim, such as bank deposits, bonds, and stocks. So, a financial asset. So, a non physical asset. So, it's not a car or uh, a I mean, so actually what this is, I'm sorry, let me rephrase that. It is a house or a car or something whose value is derived, is taken from a contractual claim, which is a bank deposit, a bond, a stock. Bonds were created. Look how old this document is. Act of placing cash with some entity, most commonly with a financial. So a bank deposit is when a bank puts money into another institution. Not only is it a person putting money into a bank, but it is also a bank putting money into an institution, which is what banks have been doing for, since the beginning. Look, this is all. What is that? German? I don't even know. You can research it, but so let's keep going because I think I made that clear. So financial assets are usually more liquid than other tangible assets, such as commodities or real estate, and may be traded on financial markets. A financial market, by definition, is a market in which people trade financial securities and derivatives at low transaction costs. So it's a place where people will go to spend money, such as a store, or it will be a way for people to trade that which has value, dollar bills, to other institutions with low transaction costs because of liquidity. So the implication, I guess, here is that I'm trying to gather my thoughts. This is a lot going through my head, and I'm sure it's a lot going through your head. So the point of what I'm saying is that a financial market, or just go back to an asset. An asset is just simply anything their value is derived from a contractual claim, such as a bond or a stock or a deposit. Financial assets are usually more liquid, remember we talked about that word, than other tangible assets, such as commodities or real estate, what we buy and sell, or what we live in, and may be traded on financial markets. So the implication, how now that we've actually dissected these terms, is that liquidity, the ability of cash on demand, is something that has value. Because financial assets are usually more liquid than other tangible assets, such as commodities, a car, a house, even a stock at this point. That's the misleading thing. A stock is a commodity. A house is a commodity. You buy houses. It's real estate isn't just, normal people don't, go into the real estate business. Normal people buy houses. So financial assets are usually more liquid than other tangible assets. So liquidity is the ability for an asset to be traded for other assets. So what we're talking about is a way to have on-demand liquidity, so we can have access to that which we trade with instantly. So we're talking about turning dollar bills, things that we we have value in. We put value in dollar bills, and we're trading it for something that will be instantaneous, because the market of today can no longer sustain the process of which dollar bills are converted into corporations, homes, objects, things you buy and sell. So what people who are investing in Ripple are doing is they see that Ripple is the one who is the big shark, because this is the one that is supplying on source liquidity, the ability to trade within a market, to the entire world. So, just for example, if you were to have one share of Amazon, when Amazon launched into its success back in the 90s and whatever, the thousands, imagine how much money you would have now. So, by putting money into XRP, we are subsequently backing up the financial institution that supports the capacity for money to be traded instantly, i.e., for money to go from one person's dollar. So if I gave, my friend $5, I could do it without having to set, Venmo, or having to, give them cash or write a check, to giving it to them instantaneously. And I'm going to let you guys go in here and read all this stuff for yourself. And so this is the key word here: faster. It's faster and it's less costly and it's more scalable than any other digital asset. It is faster, less costly, and more scalable than any other digital asset. So it is quicker and it is less expensive and it is more scalable to the economy, than any of the other digital assets that exist, because Ripple has been in the background laying the groundwork for us to no longer have to use dollar bills, but to use this ledger, this digital asset, we talked about this. An asset, a financial asset, is simply, a source of liquidity, i.e., a source of dollar bills, i.e., a source of coins. And they've been doing this right under our noses, and all, the big, you know, Jeff Bezos and the very, very, very successful and smart people know this, and they've been preparing for it. But it's just now that the everyday Joe Schmo, like you and me, are getting to take advantage of it. So now we get a chance. And so what Ripple is, let's just go to, sorry, let me turn. Oh, I haven't tried listening to a video. Let's see. Okay,